Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be looking at the TQQQ, just sort of an April update for this one. The TQQQ is a 3 times leveraged ETF, and it's meant to replicate 3 times the performance of the QQQ, be it up or down. Now, this is one that I've been experimenting with in my portfolio here in 2022 at a very small level, but I've done a ton of research on it, and I have certain rules that dictate whether or not I buy into the fund. So for this video, we'll take a pulse on where the TQQQ stands today, match that against my rules for investing in this one, and see if it's a good time to buy in. Now, throughout the video today, you're going to see a ton of screenshots from the SeekingAlpha Premium platform. My affiliate link for that is in the description. Saves you a significant amount, I think 50% off a 1-year subscription to SeekingAlpha Premium. So definitely check that out if you like some of the data points we see here today. Let's kick things off with a quick news headline. We see that the Q1 ETF inflow numbers have come in. That obviously includes January, February, and March here of this year, a time that was very, very turbulent in the market. So I always think this is kind of interesting to look at. And they've got the leaderboard down here. Probably no surprise here that the Vanguard S&P 500, the VOO, came in number 1 at plus $25 billion in inflows. During that quarter, this one was down minus 5.2%. But as it relates to the TQQQ, I thought it was very interesting that that registered 6th on the list of highest inflows for all the ETFs that are tracked on the market. And perhaps even more interesting is the fact, and let me double check this, the TQs are down the most in that time period, minus 30%. Obviously, it tracks Jan 1 through April 31st. So despite the volatility, despite the downturn, we still have an ETF that ranks number 6 in Q1 for the most inflows. And the likely reason behind all these inflows is because the TQQQ in quarter 1 had several moments there where if you're a rules-based trader with this one, it was flashing significant signs of buying all at the same time that it was declining significantly in share price. All right, so what are my rules for investing in TQQQ? And I want to write them out here so that you can see them, because it's very important to understand that any leveraged ETF like this has inherent risk to it. So in my eyes, it's really important to know this is not an ETF that any sort of financial advisor would recommend. Okay, so we're thinking outside the box with this strategy, and I'm doing it with a small portion of my portfolio. So it's important to do that. This is not an all-in bet for me, and I have these rules here that I follow. Rule number 1, I understand the risks. Okay, so I've done my research. I understand that this could have significant downside to it. The most common concern that people have is, what happens if the QQQ goes down 33%? Does that mean my ETF goes down 99%? That is technically true if it were to ever happen. However, nowadays, if you do end up reading research on this, we have circuit breakers on the market. The TQQ resets daily. So the likelihood of a minus 33% day for the QQQ is almost nil. It just, in my eyes, it will never happen. However, that is out there if you want to bite your nails about it. Rule number 2, you always have to be bullish on the long term, particularly the long term of the QQQ. You should have a very good familiarity with the QQQ, as I do. You should understand what is in that ETF and the holdings that are present, and generally be bullish on just about everything that's in there. All right, number 3, I buy at or below a 14-day RSI of 40. So this is the key. You do not buy this on any given day, I suppose. Some people probably do have a dollar cost average strategy where they might buy every month on the 15th or something like that. For me, I do not buy unless it is in the 40s or below on the 14-day RSI. Number 4, I want to sell shares, lock in profits, or sell covered call options if the RSI goes at or above 70. We'll take a look at some RSI charts here year to date, and I will say that it's a relatively rare event that you're going to get 70 or above, but it is important to watch for it so that you can either take some profits or put yourself in position to gain from, let's just say, a natural high momentum. Number 5, always have cash available. This rolls right into number 3. You have to be able to buy the dips. If you can't buy the dips, if you spend all your money and you go all in, you're putting yourself at a significant disadvantage to owning this one. Because if you wake up with $0 and this drops below the RSI of 40, you're in a situation where you can't take advantage of what many would argue is the best time to buy. All right, and I just made an edit here on number 6. I had TSM, which is Taiwan Semiconductor, but bottom line, rule number 6, you need to have a hedge plan for this one, particularly the deeper that you go. Now, right now, my portfolio does not have a super high percentage allocated to the TQQQ, but most people who are going in deep on this one are riding 50-60% TQQQ with a hedge strategy attached to it. So I put a couple examples here as far as bonds. This TMF is a Treasuries ETF you can look into. I've been more inclined as I go through here to think in lines with the VYM, which is a Vanguard dividend fund. But the bottom line here is when interest rates go up, which would be good news for bonds and treasuries, most of the time technology stocks or high growth names tend to come down. Now, to be fair, I haven't really developed a hedge plan yet. I haven't started investing in that hedge plan yet. Right now, I'm just focused on allocating in when we pass some of these other rules that are displayed here. Okay, switching over to my portfolio tracker here in SeekingAlpha. And here's where I stand with TQQQ right now, okay? I've got 105 shares, average cost of $47.88. I'm up ever so slightly, 21%. Total value is $6,000 or some odd dollars. So thanks to the recent uptick in the market, I'm actually positive, even though I just started this one in 2022. But you can see this valuation in the $6,000 range. My portfolio, depending on the ups and downs that we've had so much of lately, is anywhere between $85,000 and $95,000. So you can see right off the bat that TQQQ is not even 10% of my portfolio. That's one reason I'm not super concerned about the hedge strategy 100% yet. It should be noted, though, that I do have a healthy chunk of the regular Qs, 15,000, and ironically, that sits at minus 1.5% where things stand right now. All right, so let's check in on our chart for TQQQ. This is a daily chart year to date for this one. And if we go all the way back, give or take, to January 3rd, the price at that time was 84 some odd dollars. Today, you are down to 58.41, so that would be a minus 30% run year to date for TQQQ. Now, if you remember back on my portfolio page, I'm actually up 20% on TQQQ because I did not buy just one block on January 3rd. I've peppered in around here following the rules strategy. And with those rules in mind, we see that today you have an RSI of 55. And if you look over in here while I'm scrolling, you get an idea that the past several days have offered really no upside to purchasing the TQQQ. You've been riding in the high 50s and into the 60s. Today we did have a downturn, but even at 55, there's not a lot to get excited about. You have to go back to, looks like March 7th. You were riding in the 30s, and March 4th as well, March 3rd. You had several opportunities in February to get it in the 30s. And heck, if you go back to even January, between, let's call it the 19th and the 27th, you were in the 20s at that point. So if you had bought your first lot here in that January timeframe, you would likely be up at least a little bit on where TQQ stands today. So that's really the secret to think about this one, because it can move so quickly to the up or down side. You really have to capitalize on the downside. It's almost more important than worrying about when you might sell it. Because if you don't capture those low RSI days, then you're missing huge opportunities to lower your cost basis and build for your gains over the much longer term. Okay, so we talked about my rules for the TQs. We looked at where the momentum has been sitting here year to date and the different opportunities that there were to buy into it. I personally also like to track the valuation and growth metrics of the stocks within the QQQ. So what I've done here in SeekingAlpha is I just built a portfolio with the top QQQ holdings, and all these names together on any given day represent between 55 and 65% of the QQQ. So by having all these stocks on one page, I can use a lot of SeekingAlpha tools, for example, the ratings here that I just clicked on. And if we want to see what are SeekingAlpha authors saying, people that write for the website that are really just folks like you and me, financial advisors, etc. What do they think about Facebook and all these others from a consensus level? And it doesn't take long to see a lot of green here. As you get down to the bottom, you get Tesla actually the lowest, ironically, at 2.9%. Now in SeekingAlpha's world, that is still a hold. So that is not a sell sign. Then if we go to Wall Street, this would be scores from Wall Street analysts on buy, sell, hold. You've got even more green with 3 conviction buys here on Google, Microsoft, and Amazon. And you have to get all the way to the bottom to get scores that are in the 3s, which, by the way, as we mentioned earlier, those are holds. Those are not sell and run as fast as you can for the exit. They're just saying, be cautious about buying Tesla or Intel today at their current price level. All right, and we also have the SeekingAlpha quant score, which is basically their little algorithm that goes against several factors that you see in this sub-menu here that they measure, and then they just assign a buy, sell, hold for their stocks based on basically computer inputs, right? And as you look at these, you can see the scores, the sort of buy now scores are not as high across the board. You have a ton of holds, and it isn't until you get down to the bottom with Adobe, Netflix, and PayPal that you start to see maybe some weakness. Now, the thing is with these stocks and using an algorithm, those 3 stocks that were at the bottom, they have very low momentum right now. Interestingly enough for me, as more or less a fundamental investor, those would probably be the stocks that I'd be the most interested in terms of buying low and selling high. All right, let's take a look at a couple valuation metrics using SeekingAlpha. And I'm just going to go to forward PE, sort by the lowest, so that we see perhaps, the best deals out there. You can see some of these, most of these are semiconductor stocks, so they're always going to have a little bit lower PE. But if you just eyeball this list, and as we get closer to the bottom, you've only got, let's see here, a handful from Microsoft all the way down here to Tesla that are even over a 30 on the forward PE. Now, is that cheap from a relative standpoint? You'd have to look at each individual stock to say, right? But what I'm glad I'm not seeing on a forward EPS version is I don't see a lot of hundreds, 50s, 60s, right? So we're just doing an eyeball look here. And you could make the argument that it at least passes the sniff test. Now let's look over at price to sales. So if you get your high growth tech names, and NVIDIA's right here on top along with Tesla, you get high price to sales ratios. In fact, I would say, during the peak of the euphoria for maybe tech stocks. I mean, you had tech stocks that were 50, 60 times sales, which is obviously insane. But we're not concerned about that. We want to know where do the Qs stand today in terms of price to sales. And if you take out Intuit, Microsoft, Adobe, Tesla, Nvidia, you got everybody under 10. In fact, scrolling all the way down, you got Costco at 1.21, Comcast under 2, T-Mobile about 2. So good numbers. And again, it's sector relative. Each stock would have a different fair price to sales, but I'm just glad that I didn't log in today and see, Nvidia at a 99 price to sales. Frankly, 25 is a little high as it sits, right? But most of these other ones look okay, at least as a quick check on QQQ valuations. All right, the other thing that I keep track of myself is growth rates, both for EPS and revenue. I want to make sure that the companies within the Qs are not slowing down their growth or, God forbid, regress in their growth. And that's something we really have to pay attention to with supply chain, the COVID era sort of ending, change in shopping habits. But if we just go revenue forward and we sorted by the most revenue looking ahead, right off the bat, you got Tesla at plus 50%. So maybe in the screens previous, you would have said, well, Tesla's obviously the most overvalued stock according to some of the other ratings we looked at. But, perhaps here's why. Plus 50% revenue. And you've got AMD, Nvidia. Nvidia was another one, arguably, overpriced to some degree, but they are cranking in the most projected sales for 2022. And we have a healthy segment of double-digit revenue growth slated for all the companies here. Now, how about EPS growth going forward? Tesla, once again, at the top, 83% growth in EPS. And it's the same sort of exercise. We do have Intel. If I can scroll down here, Intel's down, projected about minus 11% this year. You got your Cisco and Pepsi again near the bottom. But then you get past those bottom three and you have double digit, if not plus 20% or more, EPS growth for the stocks in the QQQ. Bottom line here for me, I'm not the least bit concerned really about where the QQQ sits from a valuation and growth standpoint, but it's always good to go in and check once a month, every couple months, and make sure that the companies that are really the core of what you're buying in the TQs, they should still have a relatively good outlook for the short term. That's exactly what I'm seeing here. All right, guys, so that's my April update here for TQQQ. Market is a little soft today. It looks like the NASDAQ's almost down 2%. However, my TQQQ investment is still riding at plus 20%, mostly because I followed the rules and bought at low RSI points. Now, does that mean that I have profits locked for the rest of my life? Probably not. I would expect more volatility here in the first half of the year. In fact, I'm much more bullish on Q3 and Q4 than I am Q1 or Q2. So I'll be looking for lots of opportunities for momentum to slide to the downside. And frankly, I'll be smiling because if I see that dip under the RSI, I will continue to buy in with the goal of reaching at least 10% of my portfolio. All right, guys, let me know how your TQQ shares have done this year. Are you thinking about buying in? Do you have any questions? Feel free to leave them in the comments below. Don't forget to check out that SeekingAlpha Premium special offer I have for you that's exclusive to this channel. Saves you 50%. You can do a lot of cool things like I showed you on the video here today. And of course, if you like this video, it helps me out a ton if you give it a thumbs up, share with your friends, all the things. We'll see you on the next one.